Hello everyone, a very warm welcome to all of you guys. So this week has been a very sharp sell-off in both Nifty as well as Bank Nifty. Guys, when we learned about Dow theory, there was an essential Dow theory tenet that we learned, and that Dow theory tenet goes like indices must conform with each other. It was more precisely like the averages must conform with each other. So averages in that context were Dow Jones Industrial Average and Dow Jones Transportation Average in context of US about 100 years back. In Indian context, those two averages are Nifty as well as Bank Nifty. Considering India is an emerging economy, so banking sector will prove as a kind of an important index which will propel the growth of Indian industries. So banking index. So Nifty so far is holding up higher than the previous higher low level, which was our basis when we considered this as a next upwardly move, while Bank Nifty is closing about 2.5% below that level, right? So Bank Nifty is showing a very weak kind of a sentiments, right? Let us dig into it and understand how do we see both these indices with respect to what has happened in this week and what do we expect in the coming week. So let's keep it limited to about 10 minutes or maybe little more than that. But what we will do is that, see, this entire correction has lasted for about 2 months now. It started on 30th of June, and from 30th of June, today we are on 29th of August. Today is the last trading day of this month, August, and it's almost 2 months now. It's like complete 2 months. So we'll take a look at both these indices in these 2 months, what has happened. Then we'll also take at the open interest positions. Open interest as a analysis proves a very important role, and it is hinting towards something. Let us have a look at that open interest as well. And also, most importantly, the weekly expiries of Nifties are now shifted on Tuesdays, right? So I have certain points to tell you about weekly expiries as well and how to trade it. Okay. So let's jump on to Nifty individual chart. At present, right now, I have a Nifty as well as Bank Nifty weekly chart in front of me. On a weekly chart, we can see that about 420 points fall is there with respect to previous week's closing, and for Bank Nifty it is massive 1400 points fall since last week's closing. If we take a look at the Nifty individual chart on a weekly time frame, we had calculated retracement levels. Filling the gap was first expectation, that filling the gap got completed, and then still the fall is going on. It is also possible, we had seen this possibility for Bank Nifty that it might do a double bottom kind of a scenario. Here right now Nifty is at a 88% retracement and a close near 24,450 or 500 is a very good close in my humble opinion. So let us observe how this action goes. Now essentially what we require in my understanding, as per the analysis, the risk to reward ratio is not in favor of bears right now. The fall has taken place. I have not shorted in this entire fall for a better reasons, that it is kind of a conflicting with the holdings that I'm having, the kind of portfolio that I've created. So I am right now just waiting for this dip to get completed, and then that will be an appropriate time for me to add to those positions, add to those investments, or add to those portfolio constituents. Right now, if we take a look, we are at a 88% retracement of the entire rally that has taken place, and the fall right now is taking here. So I'm shifting on to this daily chart. Now, if you remember, I had mentioned about that we will not go long unless and until the hourly Dow theory changes. Here I'm going to change that statement a bit. I'm going to reframe that statement, not change the statement. Now we need a close above previous day's high, right? So if it opens somewhere here next day and it closes above this high, then and only then we will look to go long. That is the only possibility. So for today's action, if we had a close above this high, then it would have been appropriate for us to look for a bullish scenario. Right now, I will not look to short this market. Certainly, I will not look to short and carry those short positions. I'm just going to observe this. Shift on to hourly chart. On an hourly chart, we can see that the market right now showing a lot many signs of bullish bounces. Lot many attempts has been made. It's a very good support zone, and from this zone a bounce is possible, unless and until, why I am constantly talking about bounce is possible, and unless and until an hourly Dow theory changes, or if we get a close above previous day's high, then and only then look for bullish trades, is primarily because otherwise we will keep on banging our head against the wall. If you are looking for bullish opportunities or bullish trade every now and then it will be all anticipatory and it will not make sense at all. There has to be a system, a setup which will give you clearance. Like there has to be a filter which will tell you that now you can look to go long. If I don't want to short the market, that does not necessarily mean that I am to go long. I'm trying to go long at every possible opportunity. No, I will wait for an appropriate time, let the market confirm that it is reversing, and then and only then we will look to go long. This is about Nifty, right? So Nifty right now, we have a previous bottom was here, right? So this was a previous bottom level, and from these levels currently this is the basis. This is like the previous bottoming from where the rally has begun, and we just expect it shouldn't break below this level of 24,337, or at least make a equal low and then bounce from these levels. As for Bank Nifty, if we take a look, Bank Nifty is showing a much weaker stance with respect to Nifty, and here at this point in time, whatever target calculation that we have done for this was primarily for a retracement targets. But right now, whatever rally has taken place, it has already fallen twice of that rally, right? It's a 200% target that has been achieved. So essentially, we are just waiting for market to turn reverse from these levels. Typically what happens is that on a daily chart, if we get to see something like this, which is showing kind of a breakdown from these levels, imagine the candles are getting narrower, like it is closing where it has opened today, and it is not showing any kind of a significant body. These are the levels where the analysis on the basis of price action cannot arrive at any conclusion. So for these kind of situations, we have to take support from the OI analysis. So let me just quickly take you on to the OI analysis. So this is the Nifty September monthly expiry contract. This is total open interest, and in this total open interest you will get to see that there are significant bullish positions at a strike of 25,000, 25,500 and 26,000. I'll let go these two strikes. I'll just not focus on these right now, but primarily my focus is here on 24,500, which is where the huge put writing is there, and also 25,000, right? And this is 24,000. So these are the three significant put OI positions. The put OI positions are greater than that of the call OI positions. If we go to change in OI, so even in change in OI, you'll get to see that there is a put writing that is taking place at 24,500 and also 24,700. There's an unwinding from 25,000 that is taking place today. The unwinding is about 1.7 lakh. Right, but what is total open interest? So total open interest for 25,000 put option is 44 lakh. So out of 44 lakh, out of let's say 46, 47 lakh, let's say 2 lakh has gone, and now we have 44 lakh 37,000 open interest remaining. It is still a very stronger bullish OI, not a bearish OI at all. We have to observe this. But these are the levels, significant level, and ideally we should not close below 24,500 for a longer period of time, and then the market should ideally bounce from these levels, is what my understanding is. If we take a look at Bank Nifty, what is happening in Bank Nifty? So Bank Nifty again 30th September. Remember, the expiry has changed from a Thursday to Tuesday now. So if we go to open interest, in open interest we have a significant open interest at a strike of 54,000, 55,000 and 57,000, right? So a highest red flag, highest put writing is at a 57,000. Imagine price is trading right now, price is trading around 54,000 or little lower than 54,000. And why there are option writers who are selling 57,000 put option is my simple basic question. So these are the red flag strikes. If we go to OI change, in OI change we get to see that there's a significant OI addition, put OI addition in 54,000 put option. Then there is a significant OI addition in 54,500. Then it is at 55,000 and also at 57,000. So these are not bigger positions, but there is an addition that is taking place on a day like this, on today. Significant positions are here. So this 54,000 can act as a support, just like Nifty, when I mentioned about 24,500 will act as a important support. Similarly here as well, in case of Bank Nifty as well, the support level will be 54,000, and from this level the bounce should ideally take place. So weekly expiries are shifting from Thursday to Tuesday, and that's not a very encouraging sign. Also, you must have noticed that the volume has gone down drastically. The liquidity is reduced, especially in Bank Nifty. It will follow in Nifty as well. There are so many people who are shifting to some other asset classes. I'll not get into those asset classes. My humble suggestion to all of you is that for weekly expiries, for now, weekly expiries, don't consider weekly expiries as a buying option mechanism, right? It's a wonderful hedge. It works wonderfully for the strategy part, or let's say playing straddle neutral strategies. At times it works great for a weekly hedging trades, but try and avoid weekly expiries for naked option buying. So that is something that one should avoid, and stick to longer duration expiry. So you have to have certain time value in your hand, or a period number of days in your hand, for you to be able to trade these kind of a volatile situations, and do not enter on anticipation. That's another thing that I want to tell you. You just have to stick through this phase. Even if you don't get trades for days together, that's still okay. Just like me, if you have decided not to short the market, then it is very difficult for you to be in front of the screen and not take any trade. So these kind of things will keep on happening, but right now I would only say that the risk to reward ratio is in bulls favor. So it will be a scenario that will be super once it unfolds. So we just have to wait patiently and let the market do its magic, right? That's it from me for this particular week, guys. Thank you so much for watching. I'm signing off. Bye bye.